I do not expect this video to get any views at all because the attention on bread is extremely low. But that's potentially the opportunity because there is correlation between attention and price. We want to buy low, we have to buy when nobody's watching. We want to sell when everybody's talking about a token. Bread might be an opportunity. Let's have a look at the on-chain data and the relative valuation charts. The data most people aren't really looking at. Now we are talking about the bread on the base chain. And interestingly enough, over time, there's still consistent search volume for the asset. Now initially, this video didn't get much traction. It underperformed the average video. But over time, bit by bit, people are searching still for bread. And that's quite surprising given its relative performance. But more on that in a second. Meme coin trading is always about the risk versus the potential reward. If the market cap of a meme coin is already too high, when it's already at 2 or 3 billion, then it's very hard for it to do another 3, 4, 5x. But when it's comparatively small, just a few 100 million, then there is still potential. So that's always the question. When we risk quite a bit of capital, do we actually get this compensated with potential return? Now, bread is currently at 441 million market cap. And yes, there are some meme coins in the billions, but most of them tend to peak out at around 2 to 4 billion. It's very hard to get above 4 billion. Yes, there's Dogecoin, yes, there's Shiba Inu, but those are exceptions. Most meme coins peak out somewhere between 2 to 4 billion. So there is quite a bit of upside for bread. Potentially a 5, maybe even a 10x from here. That's the bull case. It's a token that's still actively being traded on the base chain. Again, it's not the largest, it's only the 16th largest trending token in terms of liquidity on the chain. There are meme coins with more liquidity, but that's the whole idea, right? We want to buy when there's still upside. Currently, we are at 4.5 cents, and if history is any indication, the upside is plus 370%. So a very similar range that we've already determined with the market cap. Now, bread, as many other meme coins, is getting traded directly against Ethereum. So really, the price discovery doesn't happen in US dollars. It happens versus the ratio to wrapped Ethereum. So when we look at the performance of bread, we actually should look at this relative to ETH and not relative to the US dollar. And when we look at that chart, we actually get something very interesting. Have a look at this. This is bread relative to ETH, and it's now at a historical support. We have been at the exact same level in May of last year, and then came the massive unexpected. Is this going to happen again? Nobody knows, but we could set a relatively tight stop loss in case things do not continue bleeding further, but suddenly stabilize and turn around again. There are many holders on chain, 871,000 to be more exact, but not all of those holders are created equal, right? Most of them just own a few cents worth of the token. So let's have a look at the data in a bit more detail. What we see over here on the left side is the number of wallets that have at least 20,000 tokens. At the current price, that's roughly $1,000 worth of the token. In the middle, it's 200,000 tokens of minimum holding, so that's now $10,000 worth of the token. And on the right, it's $100,000 worth of the token. We can see how small retail stopped accumulating bread, how this simply just went sideways. Medium-sized retail did buy a little bit. The whales tended to rather go down in number. The number of new versus returning users is also not that encouraging. Again, there is no momentum in the asset right now. And the number of buyers and sellers also tends to be on the lower end. Even the trading volume, both on the spot market as well as on the perpetual futures market, is extremely low. Only 9 million on both of those markets in the last 24 hours. This is not much at all. Now, there are bets that are made on the bread price via perpetual futures. Most people bet on rising prices, as in there is a positive funding rate. The longs have to pay the shorts to get positive price exposure. The problem is that the open interest for bread is still comparatively high, and there is positive correlation between the spot price and the open interest. When there's a lot of open interest, the spot price tends to be high. When there's not so much open interest, the bread price tends to go down. And again, now there is still some room to potentially fall further. This is the risk. As bread delevers more and more, the price will go down with it. The trading volume on the perpetual futures is relatively constant. It's not growing, it's not shrinking. And of course, most people that are currently betting on bread via the perps are the longs, and they get liquidated with the falling price. There are two potential ways to play this. We could either just go with the current negative momentum and bet on falling prices and have a very tight stop loss, because in case we do see the turnaround, it's probably going to be very fast, very drastic, and very high in magnitude. The other approach would be to be contrarian and to buy this bottom now and potentially limit losses in case we fall further and really the leverage continues to get out of the asset. So this is how that looks like in charts. This is now bread relative to Ethereum. And of course, in last months, it tends to bleed, it tends to go down. And we could simply just bet on falling prices. And then in case we see a rally that's outside of the norm, in case bread was suddenly to outperform Ethereum by 30%, we could stop that short. On average, the bread price currently tends to go down by roughly 22% per month. So the short bet would be that this current trend continues at least for another month, potentially longer than that. The alternative long bet is what we talked about at the beginning of this video already. There is a historical support and there is the chance of a turnaround with massive upside. Again, a 3 or 4x upside. The question is then, of course, where do we set the stop loss? At what point do we not believe in the turnaround anymore? It's now decision-making time for bread. If we do see the massive breakout, then again, all the eyes will be on bread and maybe this video will get some views. Right now, I believe it will very much underperform because, again, trading activity around the asset is extremely low and the performance tends to be rather negative. The momentum currently is not very encouraging. In the last 5 months, bread underperformed Ethereum by 74%. Now, wherever there are patterns in price movement, there's a potential opportunity. A lot of people say that it's just random, that there's only luck involved in trading and in active investing. But really, once we have repeatable patterns, it's not. So let's look at this fundamental pattern. This is Dogecoin as an example. Very often, we see prices shooting up extremely quickly to then deflate over a very, very long time afterwards. So for whatever reason, the price moving up happens much faster than the price moving down. We see this in Dogecoin. We also see this in Floki Ino, right? Just have a look at how quick this rally happened and then how long it took to deflate again. And it doesn't just happen with meme coins, right? This is XRP. It went up quickly to then subsequently deflate for a very long time. Or here, right? The rally happened just in a matter of a few days. A secondary rally happened, but then again, the deflation took a long, long time. So there is obviously some kind of pattern here. And this is across the entire crypto space. And there is a fundamental reason for that. I believe that reason is attention. People say that we live in an attention economy and that attention equals money. And for crypto, that's exactly the case as well. As there is more attention on an asset, the price tends to go up. Now, why does it go up much faster than it tends to go down? Because usually there's some kind of event that happens that brings all the attention on an asset. So people read the news and they wonder, should I buy TON now? Should I buy XRP now? Should I buy YZY? Whatever it is, right? There's always something going on, and attention means potential purchases. There's also influencers that talk potentially about small cryptocurrencies that then bring a lot of purchase orders with it, right? When thousands of people watch a certain video on a small altcoin, then of course this has some implication on the price. And so we've got this overall capital pool that tends to grow over time, right? Crypto is still a growing market, but within that capital pool, it tends to concentrate towards a few assets at different points in time. Once there is attention on an asset, the price goes up, but then if there's no new news, then the attention tends to fizzle down and tends to go to the other assets. So it's a bit of a game of whack-a-mole, right? There's asset A that gets pumped up, then it's asset B, etc. And so this is where most people lose, right? Most people try to find the needle in the haystack, the 1, 2, 3, 4, 5 altcoins that made the multiple X returns, while the vast majority tends to go down. How likely is it that when you're buying the next recommended altcoin, that's going to be the next KeyCat or the next Dog in Me or the next GP token? The likelihood is rather low. You're probably ending up rather with Ino or with Memecoin or with the Apex token. If you're really honest with yourself, when you look at your your altcoin trading and you compare that performance not to the US dollar, but relative to just the buying and holding Bitcoin, Ethereum and Solana, how much did you actually outperform with the active trading? Very likely you underperformed. And again, this is because this is a rigged game. There are a few people that influence the market, that push up prices, and then over time those prices deflate again. I'm doing the exact opposite. I'm trying to find the tokens that got hyped, but where then that hype is dying down, where we're already in the deflation. And then I bet on relative valuations that those kind of assets continue to do worse than Bitcoin, Ethereum and Solana. So while the vast majority of retail investors, they just buy what the influencer has shilled, what the influencer is promoting, where the influencer potentially even got money to promote it, I do the exact opposite. I bet on falling prices at that time. So let's say Elon Musk tweets about Dogecoin again, Dogecoin pumps up, the retail investor gets in. That's when I put this on my watch list. And I'm looking at what point in time is it starting to deflate. And I bet on falling prices over here. Just have a look at what I shared on February 14th. I'm entering a Dogecoin relative to Bitcoin short position. Then 1 month later, I sold it. And that was because Dogecoin underperformed Bitcoin at that point by 32%. So that's what you want, right? You want underperformance when you bet on falling prices. There are a few details to this strategy, but it is a long-term winning approach. Just have a look at a few trades that our community has done. Now, I've actually opened a capital pool where the community members, the premium community members of this channel were able to pay in. This capital pool, unfortunately, has already been closed because we have hit our maximum deposit limit. We are still trading with this until end of the year. I will continue to share the performance here, but it just shows how constantly we can make money by doing the opposite of what most other people are doing. This is 1.5 months. The maximum drawdown from top to bottom was only 2.6%, and we are already at an annualized return of 78%. Before running this capital pool, I've done this approach myself on my own capital, and that's the return over the last 4 years. So this is just a chart from Excel. This is monthly data. Had I just dollar cost averaged into Bitcoin, I would have gotten the return here marked at this gray line. But because I also did shorts on very poorly performing altcoins, I got the return indicated here in black. And I know it can be a bit daunting at first, doing something completely different, going long one asset, going short another asset, doing an entirely different approach compared to just buying an altcoin, just following an influencer that promises you the next 10 or 100x. I know this is a different mindset, but again, we have to do the opposite of what most other people are doing. I created some tutorials to make this as easy as possible. If you want to keep it brief and you're busy, you just have to watch 2 videos. How to use perpetual futures on hyperliquid and how to do risk management with relative valuation bets on hyperliquid. It's only those 2 videos and they are in total just 1 hour in length roughly. After you have watched those 2 videos and you've joined the community, I will then send to you my favorite trade. Now that favorite relative valuation trade tends to go up quite consistently, and I've got a strong conviction that it will continue to do so. And because of that, if you enter that particular trade and you do not make money after 1 month of holding this trade, I will refund you 100%, no questions asked. I'll refund you for the premium membership. The monthly rate is currently $125 US. You can either pay via credit card, or if you want to pay in crypto, you can do that as well. For crypto payment though, the minimum duration is 3 months. But again, after 1 month, if you don't make money with that trade, I will just refund you. You can watch all the videos basically for free. And it's not just about the videos, it's also about the trades that I share in real time, where you can basically manually copy trade what's currently being done with the capital pool. Yes, the capital pool is currently closed, but if you join the annual membership, you will get the chance for early access to the next pool that will start at the beginning of next year. So if you don't want to invest the time, you instead just want to invest the capital, let this run for you. Then with the annual membership, you will get that offer first to join before the deposit limit is hit. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.